Hey, my name's James Dixon. I hope you are well. In this video, I want to talk about should you fix your mortgage for 2 years or 5 years? It's a very common question. I get asked this tons in the comments and even by friends and family because now is a really uncertain time. We've had interest rates going up 14 consecutive months in a row. We've just had a pause. We've got rates being lowered by the lenders. So what is going on? Let's unpack that and more in this video and figure out what's best for you to do. Now, if you have just joined our channel, please make sure that you do subscribe and hit the bell notification. We've got new content every single day and the channel is growing really fast at the moment and I don't want you to miss out on all the good content we've got. We had 100,000 views in August. We're gonna hit 150,000 views in September, which is mind-blowing. My goal is to hit 200,000 in October and maybe more. So do subscribe and hit the bell while you're here. And if you can help us really easily by smashing the like button, that really helps us with the YouTube algorithm. So, new pen in this video. Hopefully it works. If you saw the last video, we threw 2 pens away. It was crazy. So what is going on with the market at the moment? Well, it's been a really difficult few years, hasn't it? We've had a pandemic, which I looked at that period of time and thought, this isn't good. My property portfolio is going to crash in value. It just logically made sense, didn't it? Businesses were shut, they weren't earning, but we did have some fairly good schemes like the furlough scheme, the bounce back loans. They kept businesses going. Now we're paying for that though, because we printed record money and we have all this crazy inflation at the moment. And for a while, we had inflation at over 11%. And it had some months where it just really wasn't shifting. Most countries around the world got rid of their inflation or dealt with it better, significantly better than we did. Spain got it down to 2% very quickly. America got it down to 3%. Other areas of the EU got it down to 5% very quickly. We've been stuck at 6 and 7s for a while. Now, what's happened in the last few weeks is the government were doing the rounds in the media saying, look, inflation's going back up. That's what we were expecting. But out the blue, it actually dropped again this month. And so what's happening is banks are looking at that. They borrow from something called a swap rate. So they borrow from big institutions and they borrow billions at a time. So they might buy 50 billion in credit and then they lend that to little minions like us on a mortgage. And so they've had that rate dropped significantly in the last week. And so it's interesting. We just did a video, go and check this out if you haven't seen it, yesterday about rates that are below 5% now. And so this is the question that you guys want answering. Should you go for a 2-year deal or a 5-year fixed deal? And my answer to that is not what you want to hear, is it depends on you. Just for real clarity, I'm not a financial advisor. You should get a mortgage broker to talk you through with this. And in fact, that would be the smartest thing to do, is to pick a mortgage advisor. So here's what I'm doing, right? So this is what I'm doing. So most of my deals in normal times, I go for a 2-year fixed. And that's because I'm an investor. And so my goal is to, in 2 years, take out some extra money and do some more deals with that. And that's how you normally would grow a property portfolio. Now, if the market has been just had a crash and it's been on a downward for a little while, then I might mortgage up to 75% then, because it's probably likely that it's more likely to go up. If the market's been high for a long period of time, like it has recently, or just on a massive tear, like we had more than 10% increases each year, I might be a little cautious then and not release so much equity, because after a high normally comes a fall. So in normal times, I'm going for 2-year mortgages and I'm taking out equity and I'm using that equity to buy further deals. Now, in today's market, I'm actually taking a little bit of a mix. So I've got a couple of properties that are on 2-year deals and they're my risky ones where they're not necessarily risky, the rent's always going to cover it, but I'm taking a little bit of a gamble that interest rates might go back down on those. That's what I'm talking about with the risk there. And so No one knows for sure, but I think that in 2024, by the end of 2024, you'll start seeing rates that could be sub 4%. We've just got sub 5%, so we've got some 4.99 deals now, because I think later next year, the Bank of England will start to drop rates. Banks will still be fighting, it'll still be a quiet market, and so there'll be some decent rates around then. I think longer term, rates are going to sit around the 3 to 3.5%, but I don't think we're going to get there for a year or two at least. So my other deals, what I'm looking at is I've got quite a lot of those on 5-year fixed deals, and new ones that I'm doing this week. I've got 2 new deals, remortgages that I'm doing this year. I'm doing those on 5-year fixed deals, but I'm looking for lenders that don't have big penalties if I leave that deal early. And so some of the deals that you'll look at, they might have a 5% penalty if you leave in year 1, 4% in year 2, 3% in year 3, then 2%, then 1%. If I have those kind of deals, then if the market shifts and the interest rates drop to 2%, which I can't see happening, but let's just say they did drop to 2%, right? If they did drop to 2%, I would just pay the penalty. I would get off of that deal, I would get into a 2% deal, and that is what I would do and just to get my monthly payments back down, because the actual penalty is just going to go onto the balance anyway, right? So it's not actually going to physically come out of my pocket. So my cash flow would massively increase then. So let's say I've got a 100 grand mortgage, right? On a 5% rate, I'm going to be paying £5,000 in interest per year. But if a new deal came along that was 2.5, I'll be paying 2.5k interest per year. So I'd flip onto that. I'd maybe have to pay a penalty of 2-3%, but my lending would go up to 102 then. But my annual outgoings would be better off. That's what I would do in my scenario. It might not be right for you, but that's what I would look to do on the cash flow scenario, cash flow side of things. So where do I think interest rates are going to end up? Well, I think that you're going to start getting some better deals within 6 months than you've got now. I think you'll get deals that are like around 4.75%. I don't think they'll be much better than that. And I think that's about as good as you're going to get without the Bank of England dropping the base rate. I think that's about as good as you're going to get, which is a little bit cheaper than you got now, not much. I think once the Bank of England start dropping at the end of next year, that's when I think it's going to happen. I think then you will start getting closer in 18 months, a year from now, that you'll get rates that will be closer to 4%. And so that's what you've got to try and weigh up. And so you want to fix yourself in a deal that you can afford. You want to fix yourself in a deal that if you want to get out of it, you can afford the penalties. And that's the key thing here. And the other thing is look at the fees. There are some mortgage deals at the moment where I've seen a mortgage deal that was 3.8%, right? But the fees were 14 grand. So they're making their money on the fees. There's some lenders doing clever little tricks like that and people don't realise. So just look at all of the data together and speak to a broker. Those are the ones that are going to work out your income, what's best for you, and present you with the best deals. So that's my answer. It's probably not what you want to hear. While you're here, if you've got any thoughts on that, let me know in the comments. What do you think you would do? Are you going to take 2-year deals? Are you going to take 5-year deals? Comment that below. Do like the video, subscribe and hit the bell. Check out some other content on my channel. Why don't you go and watch this video right here?